Tesla, the hero stock. You know when you watch a movie and the superhero does the impossible or the unimaginable? Exactly, Tesla is the hero of stocks. I'm not a financial advisor, I own shares of Tesla. Always do your own due diligence before investing. I remember almost about 1 year back, I already saw Tesla's potential. At that point, they weren't even a profitable company yet. Back then I bought a few thousands worth of shares in Tesla, and a few months later my investment grew up 100%. I had doubled my investment, and I told myself, let me sell my shares and cash in this profit, because I was feeling anything that could go up that fast could also go down just as fast. And so I did. I sold my shares, cashed in my 100% profit, pocket my money, but oh boy, how wrong was I? If you want to collect 100% profit in a stock, the first thing you need to do, please, is drop a like. And if you are new here, please also do subscribe and hit the bell. So I doubled my money, I sold my shares, cashed in my profits, and I was right. The stock went down a bit. Tesla is very volatile. But after the stock went down a bit, it climbs back up sky high again, and then it goes down a bit, and then it climbs back sky high again. It keeps doing that over and over again. Tesla this year alone has grown almost 400%, and I wasn't aware of that, so I was so happy with just that 100%. Tesla recently had a stock split, so people could once again afford to buy its shares. So now, once again, I'm investing on this company and I'm trying really hard to build up a position. Tesla PE is around 800, which yells in my ear, expensive, but Tesla is a company for the here now and for the future, so Tesla is here to stay. Which other car allows you to come out of the grocery store and it's a rainy day and you press a button or you do a voice command to your phone and your car comes pick you up? Technology innovation and artificial intelligence makes Tesla so much more than just a car company. What do you think about Tesla? Add your thoughts, comments and ideas in the comment section down below. I read and reply all comments. I'm a little behind, but I'm planning on putting in some extra hours so I can reply all the comments. On the CNBC.com Trading Nation, fighting Tesla's rallies like fighting the Fed, trader says after S&P 500 inclusion. Tesla shares are taking off. The electric automaker's stock closed more than 8% higher at $441 a share on Tuesday following S&P Dow Jones Indices announcement that the cult stock would be added to the S&P 500 index. At $411 billion market cap and a 111 times forward price to earnings multiple, Tesla will be larger than 97% of the index's components and one of its most expensive large cap stocks. It would also be one of the most volatile. Tesla's average daily stock move is far higher than that of the S&P's 10 biggest companies, a CNBC analysis found. Nevertheless, betting against Tesla may not be in investors' best interests. TradingAnalysis.com founder Todd Gordon told CNBC's Trading Nation on Tuesday this is sort of a hero's story. He said, pointing to the stock's consolidation after the May 30 SpaceX launch. The same kind of triangle pattern may be happening here on the back of a successful launch. Elon Musk also owns SpaceX. And I remember at the time he was struggling with both companies and he was saying I had to sell one of the companies to keep the other, SpaceX or Tesla. But he said, I love both companies and I couldn't sell either. And he didn't sell either. And now this is what's happening. Both companies super successful, SpaceX and Tesla. Another major driver has been Tesla's sale of environmental regulatory credits to traditional automakers, an incentive program that has been a steady revenue stream for the company, ranking in $428 million in the second quarter and $397 million in the third. They're selling these credits to the traditional gas guzzlers, Gordon said. I kind of view it like fighting the Fed. It's like saying the stock market rally isn't going to continue because the Fed's behind it. You're sort of fighting the same force that won't be defeated. So I like it. I'm long. I'll continue to stay long. On the other side of the trade was Mark Tapper, president and CEO of Strategic Wealth Partners, who admitted his had been the wrong side of this for quite a while. For this company, fundamentals just don't matter at all, he said in the same Trading Nation interview. We are growth at a reasonable price firm, and the issue with Tesla, in my opinion, is there's nothing reasonable about the valuation. Now, that doesn't mean that the stock can't go higher. Tepper said, that doesn't mean the stock won't go higher, it just doesn't fit our strategy. He warned that profits from the regulatory credits could dwindle over time as legacy automakers roll out their own electric vehicles in earnest, adding that Tesla is still losing money if you're just looking at vehicle sales. It's very easy for me or for this guy or for anyone to sit here and say, hey, reality doesn't matter for this company and it's a hero company that makes things possible. But it may not be just that. I think investors look at it and they don't see just the right now. They see the right now and they also see the future. So it's trading 10 times enterprise value to sales, and that's crazy expensive for a software company, Tepper said. Ford and GM are at way less than 1 times. This is still an automaker at the end of the day. It's a very capital intensive business, and I just think it's very expensive right here. Tesla shares have climbed a stunning 428% year to date. The company's price to earnings multiple, the PE, was 875 as of Tuesday's close. Wow, this guy after all this time is still treating Tesla as it's just a car company. He's missing the bigger picture. It's not just a car company. It's an electric car company. It's innovation. It's artificial intelligence. It's technology. I think for you just to compare it to a regular car company and ignore the artificial intelligence, the technology, the innovation, the electric part of it, no longer need to destroy the ozone layer, to burn fossil fuel. I think it's a different company. It's not just a car company. Oracle also has a small clip.
Welcome to Trading Nation. I'm Seema Modi. Tesla shares charging over 9% higher on Tuesday after S&P Dow Jones Indices said the electric automaker would be joining the S&P 500 index. Tesla's now $415 billion market cap would make it larger than 97% of the index. And at 111 times forward earnings, one of the most expensive large cap stocks. Let's discuss with Todd Gordon of TradingAnalysis.com and Mark Tepper of Strategic Wealth Partners. Mark, this has certainly been one of the stocks that has been on fire during the pandemic here in 2020. But this announcement of being included in the S&P, does it change your view on Tesla?
Well, I mean, so we've been on the wrong side of this trade for quite some while. Tesla, in my opinion, is the ultimate story stock, and for this company, fundamentals just don't matter at all. So we are a growth at a reasonable price firm, and the issue with Tesla, in my opinion, is there's nothing reasonable about the valuation, as you just mentioned. Now, that doesn't mean that the stock can't go higher. That doesn't mean the stock won't go higher. It just doesn't fit our strategy. And when you actually look at the inclusion in the S&P 500, inclusion is based on $1.1 billion of adjusted operating income, but Seema, $1.4 billion of the 1.1, which is all of it and then some, comes from selling zero emission credits to the other automakers, right? And that's going to dwindle over time as those automakers roll out their own EVs. So they are still losing money if you're just looking at vehicle sales. It's trading at 10 times EV to sales. And that's crazy expensive for a software company. Ford and GM are at way less than 1 times. This is still an automaker at the end of the day. It's a very capital intensive business, and I just think it's very expensive right here.
Todd, your thoughts? I mean, if you mentioned Tesla at the dinner table, it will likely generate a heated debate. Where do you stand on the stock?
Yeah, Mark brings up great points, Seema. I mean, the valuation is insane. With this market cap, I think it's top 10 in the S&P right now. Let's go to the chart first, if I can then adjust the fundamentals quickly. This is sort of a hero story. There's a similar consolidation before the prior SpaceX launch in the Tesla chart back on May 30th. The same thing, the same kind of triangle pattern may be happening here in the back of a successful launch. So maybe it's not, maybe it's not a court of public opinion. Maybe a court of investor opinion is getting Elon a little bit of a boost here. And as Mark said, people are citing the profitability due to those sale of government credit emissions. In Q2, they're about $428 million. That's greater than the $418 of positive free cash flow they had. They're selling these credits to the traditional gas guzzlers, and this is a little bit of a reach, so bear with me. Those incentives, that incentivizes these traditional companies to not retool, build out their EV capacity, maybe giving Tesla more time to justify their valuation here. And, the thing I think is like, they always say, well, these credit emissions aren't going to go away. I kind of view it as like fighting the Fed. It's like saying the stock market rally isn't going to continue because the Fed's behind it. You're sort of fighting the same force that won't be defeated. So I like it. I'm long. I'll continue to stay long, but I certainly understand Mark's point from an investment point of view, more of a trader's point of view.
All right. Well, that's why we have both of you to lay out the trade for us. Mark and Todd, thank you. Thanks for joining us today. Thank you for watching Trading Nation. I'm Seema Modi. We will see you next time.
That was great. We had two extremely different point of views, right? One guy fully don't understand and thinks it makes zero sense to invest on Tesla and Tesla's success. But you can comprehend it if you don't actually look at what it actually is. If you take away the artificial intelligence, if you take away the innovation, if you take away everything, well, yes, it doesn't make sense. But if you take everything that it's done, everything that has happened, and then it starts making sense, and you cannot fight this. It doesn't seem it's gonna go away. This is the future. We don't go back to flip phones. Now we have iPhones, and same thing with the car. If you have something better, you don't go back to something worse. And I feel every year Elon Musk and Tesla is able to make electric cars cheaper, and this trend is just as they keep innovating and making the new technology cheaper, more you have of it, more you know about it, cheaper you can make it, and more accessible you can make it. At some point it's going to be cheaper to have this car than another car, and if you can save every time you put electricity instead of gas, and then you keep saving every day as well. After taking every piece of information, I'm gonna keep investing on this company. I want to build up a position. Tesla is not gonna be my first position, not gonna be my second or third position, but I want to be investing in it. I want to get some of these profits. Now, when I look back, I have regrets for selling and cashing in 100% profit when if I had kept it, I could have cashed in 200, 300, almost 400 profit. And if my position now grows another 100% and becomes my first position, then it's okay. Thank you so much for watching this video. Feel free to check out some of the other videos coming up on the next screen. Have a wonderful day.